The crypto world is buzzing with excitement and anticipation. After years of anticipation and regulatory hurdles, Bitcoin ETFs are finally experiencing a surge in popularity, and the implications for the financial world are massive. Institutional investors who were once hesitant and cautious are now pouring billions into these financial instruments. This influx of capital is a clear signal. Bitcoin is gaining legitimacy as an asset class. But what's driving this sudden shift in sentiment? For one, regulatory clarity is improving significantly. The U.S. Securities and Exchange Commission, or SEC, has warmed up to the idea of a Bitcoin ETF, and this has instilled a newfound confidence in institutional players. Secondly, Bitcoin's performance over the years speaks for itself. As traditional markets experience volatility and uncertainty, Bitcoin's resilience as a store of value is attracting more attention than ever before. The numbers don't lie. Bitcoin's rise is being fueled by a significant shift in the financial landscape. Major financial institutions like BlackRock and Fidelity have thrown their hats into the ring, signaling a new era of cryptocurrency adoption, filing for their own Bitcoin ETFs. This move is not just a fleeting interest, it's a calculated strategy. These aren't small-time players, they manage trillions of dollars in assets. Their decisions have far-reaching implications. Their involvement is a clear indication that Bitcoin is no longer a fringe asset. It's becoming mainstream. It's being taken seriously by Wall Street. This shift in perception is monumental. This institutional influx is a major catalyst for Bitcoin's price. The market dynamics are changing rapidly. Increased demand from ETFs naturally puts upward pressure on the price of Bitcoin itself. The more demand, the higher the price. We've already seen significant price appreciation in recent months reflecting this growing interest, and many analysts believe this is just the beginning. The potential for future growth is immense. The more capital that flows into Bitcoin ETFs, the higher the potential ceiling for Bitcoin's price. This could be a game changer for the cryptocurrency market. The question on everyone's mind: can Bitcoin hit $100,000? This milestone has been a topic of heated debates among investors, analysts, and enthusiasts alike. While no one has a crystal ball, the current trajectory suggests it's certainly within reach. Historical data shows a pattern of significant growth, especially during bullish cycles. With institutions now in the game, the dynamics of the market have shifted. Major companies and financial institutions are investing heavily in Bitcoin, adding credibility and stability to the market. We're witnessing an unprecedented wave of capital entering the Bitcoin ecosystem. This influx of institutional money is a strong indicator of confidence in Bitcoin's future. Some experts argue that $100,000 is a conservative estimate. They believe that Bitcoin's potential is much higher, given its unique properties and market position. They point to Bitcoin's limited supply and growing adoption as factors that could propel its price far beyond this psychological barrier. The scarcity of Bitcoin, combined with increasing demand, creates a perfect storm for price appreciation. Of course, there will be bumps along the way. The path to $100,000 is not without its challenges and obstacles. Volatility is inherent to the crypto market. Price swings can be dramatic, and investors need to be prepared for sudden changes. But the long-term trend appears to be clear. Bitcoin is on an upward trajectory. As more people and institutions recognize its value, the likelihood of reaching and surpassing $100,000 becomes more plausible. The rise of Bitcoin isn't happening in a vacuum. The entire crypto market is feeling the impact. Ethereum, the second largest cryptocurrency, is often seen as a beneficiary of Bitcoin's success. As Bitcoin gains mainstream acceptance, it paves the way for other cryptocurrencies to follow suit. Solana, a high-performance blockchain platform, is another example. As institutional interest in crypto grows, projects like Solana, with their focus on scalability and real-world applications, are well-positioned to attract investment. The success of Bitcoin ETFs has a ripple effect, bringing greater visibility and legitimacy to the broader crypto market. The surge in Bitcoin ETFs signifies a turning point for the crypto industry. We're witnessing the early stages of mainstream adoption, and it's happening faster than many anticipated. As institutional money continues to pour in, it's becoming increasingly difficult to ignore the transformative potential of Bitcoin and the broader crypto ecosystem. This is an exciting time to be involved in the world of cryptocurrency. The next few years will be critical in shaping the future of finance. Will Bitcoin continue its ascent to new heights? How will the regulatory landscape evolve? One thing is certain, the ride is far from over. Buckle up.